Good afternoon, ladies and gentlemen, and welcome to the introduction to the Dylastone Group and their interim results presentation. To start with, if we could cover a couple of housekeeping items. Before we begin, we would like to submit the following poll, which you will see on your screens. Throughout this presentation, investors will be in listen-only mode. However, questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen, or for anyone who's dialed in via dillistone@walbrookpr.com. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where appropriate. These will be available via your Investor Meet Company dashboard. Finally, we would like to remind you that this presentation is being recorded. Without further ado, I would now like to hand you over to Chief Executive Jason Starr and Finance Director Ian Mackin.
Thanks, Tom. Ladies and gentlemen, good afternoon. Thank you very much indeed for joining us today for our debut on Investor Meets Company. We're very happy to be here, very excited to be here. We're conscious that in the room today we've probably got some existing investors, and thank you all for your support, but also probably a number of people that know very little about us. So what we're going to do today is start with a bit of scene setting, talking a bit about who we are, how we make our money, but also our history on AIM. Once we've done that, I'll pass over to Ian, who'll take you through our most recent set of results. We'll then circle back to me and I'll talk to you a bit about how we perceive our future. And I'm going to do a very short product demonstration as part of that session as well. I think one of the points that Ian and I would like you to take away is that we believe the business is on a track to a good place, and we feel that the recovery, because we have had a couple of difficult years, the recovery is actually further progressed than our headline figures share with you, or might suggest. If I just move the slide forward, great, it worked. These are our headline results that we've shared in today's announcement, but what they don't make clear is the impact of furlough and government support. Last year, clearly, we were supported by the government, and that had an impact on our results, a positive impact on our results. I'm afraid I've just managed to break the system. I've lost my slides. That's not great. Can someone take control of the slides, please, and present them again? I've managed to just lose them. We're a technology company, as you can probably tell. There you go. Excellent. Thank you to whoever just clicked the magic button. So, so we believe that, well, we know that last year's numbers were supported by the government to a certain extent, furlough and so on. We said that at the time. When you strip out that government support, because obviously it wasn't, we didn't take advantage of it this year, our numbers are much better. You can see that on an underlying basis, we've seen an improvement in revenue, an improvement in cash, an improvement in adjusted EBITDA. Pretty much every one of our core statistics are pointing in the right direction. So Ian will go into that in a bit more detail, but I did want to share with you at the top before we got into too much about what the business actually does. And what the business does is provides technology to the recruitment sector. We work with hundreds of recruiters, most of them third-party recruiters, so agencies or executive search firms. Plus, we work with a number of in-house recruiting teams at major organisations. We basically provide a series of recruiting technology products, and we split them into two streams. So we have contingency recruitment software. That is software primarily used by high street agencies, primarily but not exclusively in the UK. Our products in that field include Voyager Infinity, which is a CRM. We have a skills testing product called ISV Online. We have a product called Mid-Office and a product called VDQ. So that's the contingent side of our business. On the executive search side, we have a number of products as well. FileFinder, which for a number of years was our primary product in the space, generating most of our revenue. Gated Talent, which is a product that some of you will know of, that we launched a couple of years ago and faced a few hiccups, shall we say. And Talentis, which is our new product, which we will be looking at very briefly. I reference hiccups. This is the story of Dylastone Group as a public company. So when we first floated, we had a number of very successful years, grew organically, paid strong dividends. I think for a couple of years we were the highest yielding tech stock on AIM, or at least for a period anyway. We then started to make acquisitions, and again, the acquisitions were fairly positive and they supported the business and its growth. We then hit a choppy period. We lost a very large client, a very significant client, and at the same time, the initial launch of Gated Talent was unsuccessful. And those two things combined to hurt us. So at the end of 2018, the business was in a pretty poor state. We realised that, we took steps to fix it. 2019 saw a restructuring of the business. We closed down some offices. We sadly let some people go. We organised everything, and we came out of 2019 thinking that we were in a good place to progress things. We came out into 2020 expecting to be profitable, and then COVID hit. Again, as I referred to earlier, we focus on the recruitment sector. Recruitment companies weren't spending a lot of money during COVID because they weren't recruiting, because no one was hiring, because nobody could leave the house. So that was challenging as well, but we believe COVID is behind us now. We are recovering, and I'm going to ask Ian to talk you through the first signs of recovery. Ian.
Thank you, Jason. Jason's already shown you this slide. It contains the figures published this morning in the interim document. However, we believe to get a true comparison, you have to adjust for the effects of furlough and government support received in H1 21. Once we adjust for the furlough and government support received in the first half of 21 to obtain a like-for-like operational comparison, a different picture emerges. Total revenue is up by 1%, which is the first H1 growth in revenue since 2017. Non-recurring revenue was up by 30% in the period to 260,000. Recurring revenue, although down slightly for the half year, did increase in Q2 compared to Q2 2021. This is the first quarterly year-on-year increase since 2018, and we expect that to continue into H2. Adjusted operating profit increased by 76%. The order book is ahead for the year to June by 13%, and the TACV, which stands for the total annualized contract value, is up 3%. TACV is a forward-looking metric used in the software provider space to estimate what the next 12 months recurring revenue might look like. It's based on what's currently known within the company and adjusts for known decrease, but does not capture any anticipated future growth. So as such, it's a baseline figure we should grow from. Adjusted loss from operating activity is half to 219,000, and adjusted loss before tax is reduced by a third to 274,000. Both of these figures are in line with market expectations. All this gives us confidence towards year end that we are on track to hit the market projections. The underlying operation is improving. Running through the P&L, as previously mentioned, revenue is up 1%, the first revenue increase since 2017. Gross margin has kept steady at 88%, leading to a slight increase in gross profit. And once we adjust for the impact of furlough and government support, the adjusted EBITDA is up 51% at 435,000, and the adjusted EBITDA margin is edged up to 15.4%. Depreciation and amortization stayed broadly level, and the interest paid is edged up due to us benefiting from an interest holiday on the civil loan in the first half of 21. You can see the effect of the furlough and government support items, meaning the reported loss has increased to 274,000. The underlying cash flow position is improving. Once furlough and government support are stripped out, adjusted net cash from operating activities is up 76% to 560,000. The investing activities, which is mostly our spend on software development, is only slightly down at 482,000, and this decrease was due to reduced management overhead. We kept our core development team on. All this leads to an adjusted net change in cash being 47% better at 186,000, trending towards neutrality. Cash finished the period at 608,000. On this chart, the blue line indicates the underlying cash movements of the business in the half year. The green line indicates all the exceptional income received in the relevant half year through loans or government support or furlough, and the red lines are all the cash flows associated with acquisition costs, dividend payments, and financing and payments of the loans taken out. As we can see, at the start of 2017, the operation generated a healthy surplus. Then things declined. As a business, we recognised this decline, we reacted and we reorganised during 2019. We were just beginning to see the benefits with the underlying operation turning cash positive in H2 19, then COVID hit. Like most businesses, we were hard hit initially, but we regrouped again. And we can see steady progress from H1 2020 and this past half year. The underlying operation cash has turned positive for the first time since 2019, and the first H1 has been positive since 2017. We believe all of the above is evidence that we've made progress on the financial turnaround of the business. The adjusted EBITDA is up 51% while we continue to invest in software development to drive future revenues. The underlying cash position of the business is improving. And most importantly, we are realising revenue growth. Our first total revenue growth for H1 since 2017, and our first year-on-year quarterly revenue growth in Q2 for the first time since 2018. Let me hand you back to Jason to go through what the future for Dylistone Group looks like.
Thank you, Ian. So before I talk about the future, I'm just going to look back at the last 6 months and talk about where our revenue growth has come from. So essentially, as I touched on at the top, we split our business into two groups of product: contingency products, the executive search products. Contingency, which is primarily the Infinity CRM, the ISV skills testing platform, they had a really good first half. Year-on-year revenue is up 9% compared to the same period last year. Now, in part, that is down to a significant, bad choice of words, a large contract win on the Infinity front. We announced that late last year. That was implemented in H1. The client is live, the client is happy, the client is satisfied, the client is a reference site for us, which is great. We have announced today another large contract, again on Infinity, and that gives us great confidence, great visibility for the second half of the year and potentially into next year as well. So the contingency side of the business is already showing really positive and encouraging signs. I'm sure we're going to get questions towards the end about the impacts of recession on the recruitment sector, but it's probably just worth me touching on the fact that the bulk of our users on the contingency side, certainly the bulk of our new users, are on the temporary recruitment side. It's generally accepted that temporary workforce tends to be less impacted by an economic downturn than permanent placements. So we feel actually that our contingency products are in a much better position than they have been historically if there is an economic downturn over the coming months or years. So that takes us to the executive search products. And I think it's fair to say that the executive search area is one that we haven't done too well in over the last few years. Back in the day, FileFinder was, I think most people would accept, the global market leader in the space. But I think it's fair to say it doesn't hold that position anymore. We still have lots and lots of clients using it all over the world, but it's not quite where it was. Over the course of the last period, we have spent some development time refactoring the platform so that it is faster for our users, but more importantly, cheaper for us to host, cheaper for us to deliver. We're now seeing the benefit of that. Hosting costs on the FileFinder platform are down by slightly more than 20% on a year-by-year basis, and much of that comes from the restructuring. We've also seen an improvement in client retention on the FileFinder front as well, partly perhaps because of the changes I've just referred to, partly perhaps because we've given FileFinder clients access to Talentis for a nominal, in some cases, no charge as part of their package. Gated Talent is the second part of our executive search stream, and I touched on that earlier. When we first launched GT, it certainly didn't perform to anything like the level that we would have hoped, but now it has consistently delivered. It's consistently profitable. It's consistently generating cash for the business as well. But the area we're really excited about on the executive search front is Talentis. Talentis is a relatively new product that we launched at the beginning of last year, and it's different. What it aims to do is essentially be one product that can be used in two different markets. At its core, it's an executive search CRM, so a tool used by an executive search firm to manage their business. That's essentially what FileFinder is as well. So it's in the same space as FileFinder. We reckon that market is worth perhaps 250 million per annum in recurring revenues. But what it also does, which FileFinder didn't do, which Gated Talent tried to do, was be a candidate sourcing tool. If you like, an alternative to LinkedIn, but recruiter can use to go and potentially find candidates. Now that market is much, much larger. LinkedIn, who obviously do lots of things, they generate revenues of 10 billion. We reckon that the candidate sourcing aspect of that is worth about 1.25 billion pounds per annum, based on internal expectations. So this is internal estimates, I should say. So this is a much, much bigger market. And almost uniquely, Talentis sits in both. So the benefit of Talentis to our clients is they can use it for candidate sourcing, or they can use it for CRM. And actually, they can use it for both. And by having two products that does one thing, there's a much better user experience. It can be said that the whole is greater than the sum of the parts, very much in this case. Now, what I'd like to do very quickly is give you a short, very short presentation of the product. Now, hopefully you can see my screen now. This is not Talentis, this is LinkedIn. I'm going to wait until I get the nod to be clear that I'm showing my screen. Let me click that button, there you go. So do that and do that. Okay, hopefully you can see my screen now and you should be able to see LinkedIn. Yeah, okay. So to be clear, this is LinkedIn, this is not Talentis. But what I've done here, I've gone into LinkedIn and I've searched for fintech, and you can see that that search on LinkedIn finds me 280,000 results. This is Talentis. I'm going to go to Talentis, I'm going to click on the search button, and I'm going to do exactly the same search. Fintech. So LinkedIn found us 280,000 people. Talentis found us 1.2 million people. So in this particular example, Talentis has found many, many more times, many more candidates than LinkedIn has. Now, recruiters don't care about the number of candidates, they care about closest of fit. So let's target a bit more. Let's say we're looking for a chief revenue officer. So I'm going to add in revenue or sales or business development to my query. You'll see how quickly Talentis is knocking the numbers down. 170,000 people, current jobs. Let's now say we want C-level. So I'm going to add in chief or director or head or whatever it might be. Again, we can make that current only. Let's say we want to find people in the United Kingdom. We're now down to 1,100 candidates. Let's say we want someone who has a background in payments. Ideally, how would you spell it right? Payments or payment. Again, you can keep narrowing it down. This type of searching, this ability to keep adding layer after layer after layer of keywords is something that LinkedIn doesn't support, at least not the way we do. So if you're searching to find candidates based on very specific industry sector experiences, this is a unique way of working. It's a way of working that LinkedIn doesn't offer, and it's a way of working that very few of the products do in the recruitment space. And the big benefit of Talentis is once you then start finding candidates, you can see when you have a relationship with that person. That's the CRM side of the product coming through. Okay, let me turn off my screen share. Okay, you can go back to slides. Okay, if you can confirm, please, that the slides are back. Great, okay, thank you. So that's a very quick and dirty demo of the product, but we have clients right now using that product to do exactly what I've done all over the world. Our early adopters primarily use the tool for candidate sourcing only, but as we've added more and more CRM functionality, we're finding that it's being used more and more on the CRM side, and that means higher revenue streams with bigger customers. This is a good case in point. This is a UK search firm that specialises in recruitment of senior execs for the private equity sector. They started off using it as a sourcing tool. They now use it for both sourcing and CRM. And this is just one example. Right now, we have paying customers using Talentis in the UK, Europe, North America, South America, Asia, Australia, New Zealand, and South Africa. So we have clients all over the world using the product in the way that I've just described it. And what that means is revenue is beginning to grow. And we launched it, as I say, in Q1 of last year. We saw the first revenue in Q2. Early adopters were paying very little. It was a sourcing tool. They were turning it on and off and so on and so forth. But you can see how revenue started to grow. In around September of last year, we had a bit of a change of direction. It's an agile product, and we focused more on certain functionality that we felt would generate revenue. That came live in November. And just to give you a flavour of the impact that had on our client base, in November, if we exclude existing group clients who were potentially getting Talentis as part of a package deal. If we talk about purely arm's length clients, for want of a better word, in November we had 4. In December we had 10. At the end of June we had 60. And that's why revenue is growing so quickly. In terms of growing it further, as I say, most of our clients are relatively small, but we're seeing that change. At our AGM announcement, we said that we expected the summer to be very slow for Talentis because, to be honest, the entire executive search community goes to a beach over the summer. However, despite the fact that prospects, opportunities were down and not many people were in the market, we're expecting that Q3 will show the highest level of monetary growth in ARR yet. Why is that? Because we're winning a higher percentage of deals and we're getting a higher order value. And we expect to continue to keep developing the product in that way, getting into bigger firms, getting into longer term contracts with customers paying more per seat for more seats. And as a result of that, we're expecting that the revenue streams associated with Talentis will continue to grow into a very decent future revenue stream for us. Okay, so that essentially is where we are today. We've had a tough time. That's apparent. I'm going to try to hide that, but we've come through that now. Our numbers are getting better and better, and certainly if you adjust for furlough, as Ian explained earlier, they're much better than they were a year ago. We're now a very efficient business. We're highly operationally geared, so as we grow revenue, an awful lot of that flows through to our bottom line. The other, in addition to Contingency, which is already performing well, we're excited about the future for executive search, and I think it's worth just reiterating. We're in a good position from a cash perspective. We are not expecting to need to generate additional cash. So there you go. That's our presentation. Thank you very much indeed for joining us. And Tom, back to you.
Yeah, super. Thank you, Jason. Thank you, Ian. We have a number of questions. However, please continue to submit your questions using the Q&A tab situated on the top right corner of your screen. I'd also like to remind you that a recording of this presentation can be accessed via your Investor Meet Company dashboard after the event. Additionally, your feedback is important to the company. So immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback. We've got a couple of questions actually around the more recent contract wins, and I'm actually going to blend 2 of them together if I can, Jason, because it might enable you just to talk around the issue a little bit. Reginald has said, what is your definition of a large contract, and can you provide a steer for the type of client who is buying, i.e. are they recruitment firms and are they small, medium or large, regional or London, etc. The other one I'm just going to combine that with, if I could, is there's a question here which is, of the 50 exec search sales in H1, what did a typical order look like?
Thanks, Tom, and thank you for the questions. So again, it's probably worth us reiterating we have a number of products, and clearly they all price differently, used in different ways, different models. I suspect the question about a large contract relates to the announcement that we made late last year. That was for a UK-based contingency recruiting business. The value of that was not far sub 6 figures in total. Some of that was recurring, some of it was non-recurring. So we would consider that to be a large contract on that side of the business. But again, we have lots of different products, and they would all price differently. They'd all have different concepts of large. We focus in on Talentis specifically. Most of the early adopters on Talentis were typically using it as a sourcing tool. And what they would often have would be, let's say, a 6-user executive search firm using the CRM, perhaps ours, perhaps one of someone else's, and they would buy Talentis just to be used by the sourcer in the corner. So the researcher would use it alongside our CRM. So our aim is that we'll reach a stage where they don't use it on just one machine, they use it across their entire team because it is their sourcing tool, but also their CRM tool. So our aim is to get from just having lots and lots of single users to having larger clients. And as I touched on, over the course of the summer, we are increasingly seeing that happening. I believe the average executive search firm is about 6 users, and we have a number of customers now of that size or larger who are using Tallentis as their only recruiting platform. So they don't use it alongside the CRM. They've decided the product is a standalone product that meets their needs. As I say, we are continually developing the product, and as a result of that, we expect we'll be able to get into bigger businesses and ticking more of their boxes.
Great. Okay, and then we'll stick with Tallentis for a minute if I can, just because we've got a question in from Steve, which says, I note that Tallentis has paying customers across a number of continents, which, while small on revenue terms, is an impressive reach. How big do you think Tallentis could be for the group, and how can you speed up its adoption? If I could just combine that with another question, which is, what is the expected cost of marketing and growing Tallentis globally? Because I suspect they overlap slightly.
Yeah, they do. Thank you. So I'm going to tell you a story, probably one I shouldn't tell you, but I'll tell you anyway. When we launched Gated Talent a couple of years ago, I was extremely excited about Gated Talent, and I thought it was going to be the next big thing. And all of the early signs were positive, and then it failed. And it failed because of things that hopefully we've learned from. So I am loath to make big statements now about future potential for specific products. What I can say is that, well, I shared the slide earlier, our revenue is growing very, very rapidly, and we have a tiny percentage of the global market using our products at the moment, a tiny percentage. So, I think that the longer term opportunity for Tallentis is bigger than that for any of our products. It can be sold globally at very little cost to us, very little cost of delivery, very little pre-sales cost, and it has a sustainable competitive advantage associated with it, which I think means that once clients start using it as a CRM, they will stick on it for a very, very long time. So I'd rather not put specific numbers on it, but I think the whole group is very excited about the opportunity for Tallentis. The second question related to marketing, and it's, if I may, I'll widen that out and talk about the implementation as well. So I can't say in every country, but in most countries, if you go to Google and you type in executive search software, and you then look past all of the adverts that Google sticks at the top, in the vast majority of the markets we care about, we have a #1 organic ranked result for that particular search. So pretty much anyone going into the market to buy executive search software, they do that search on Google, they find us. Most markets with the same one thing. In addition, we're very, very well known in this sector because of the file finder experience. Lots of people have bought file finder. We still get people coming along saying, I would like to see the latest version of file finder. And we can say to them, well, this is file finder, this is Tallentis, have a look and choose both. So we get a lot of leads coming into us organically. So we are not currently expecting to increase our business-wide marketing expenditure. What we are doing is clearly being intelligent about how we spend our money and where we spend our money. So one of the things we've referred to in our announcement today is that one of our products, BEQ, is being taken off the market because of the success of Infinity. And by doing that, it allows us to spend our marketing money, our sales money, our development money more prevalent. The other thing that I think is probably worth mentioning is, we have an existing client product range in the executive search sector in FileFinder. Some of those clients will continue to use FileFinder for a long time because they like FileFinder and it's a great product. Some of those clients will choose to switch across. What we've also seen, and we're really excited about this, is that customers that have left our group, gone away and bought someone else's product, have now come back. So again, there is a lot of opportunity for us to monetize Tallentis without actually going out and spending significant amounts of additional money on marketing. So hopefully that answers your question. Thank you.
Great. Okay. And just sticking a little bit on existing client base and products as well, David has asked, great to see excellent Trustpilot reviews. What is in the pipeline in terms of new products coming to market? And from a competitive point of view, where do you see the biggest crossover? And I wonder if we might just combine that as well with what is the opportunity for cross-selling to the existing customer base? The two might sit nicely.
Yeah, thank you. So I agree about the excellent Trustpilot reviews, and I think the team here have got to take an awful lot of credit. We've got some fantastic people working for us. And just on that topic, one of the issues that all companies in the software sector have had recently is pay inflation. We struggled with that, same as everybody else has. One of the things we've really done, and to be fair, I've got to doff my cap and tip my cap to my colleague Paul Maver, who's really led this. We built a really good culture in the business, and what we have seen is team members leaving the business and then coming back. We had somebody leave to go to a competitor. About a month later, came back because they felt that the experience of being in our company, the way we treat our customers, the way our customers treat us, is a really, really good thing. So it actually helps with retention of staff as well. So so the Trustpilot thing, we're really proud of that, very proud indeed, and thank you to the staff for sending this thing. More broadly about the products, one of the things that we've done over the last few years is focus our efforts more on the products that we believe have major development opportunities, and as a result of that, we've reduced development expenditure elsewhere. We've alluded to the fact that certain products have been taken off the market, and that is a strategy that we think will pay dividend for us in the long term. The Voyager product, we're adding, constantly adding significant functionality to it. We are looking at different ways in which our Infinity CRM can potentially take advantage of some of the big data that we have access to through Trustpilot, through Talentes, sorry. So you might see things happening there. But essentially, at the moment, with the way the market is, a lot of our focus on the Infinity front is likely to be around the temping sector, because we know that's relatively a strong market if the economy does tank. On the Talentes front, we are adding CRM functionality. We're adding lots and lots of CRM functionality. So coming out very, very soon, perhaps in the next couple of weeks. And my colleagues in the development team will yell at me if I say anything more than that. But coming out in the next couple of weeks will be some next generation reporting functionality, which we think will be really strong, really helpful for clients that produce reports for clients. We think that's a really strong piece of functionality that will be on the Talentes platform very soon. Very soon. I won't say more than that because Steve will shout at me. In terms of cross-selling, so yeah, absolutely. We've taken the decision to give FileFinder clients, in many cases, access to Talentes for free, but we charge Infinity customers for it. And so, yeah, it's also about the opportunity to retain customers, either by offering Talentes as an addition to the products we've also got, but potentially in the long term, giving them an alternative type of product that they may want to port to. Again, we'll continue to support FileFinder for as long as it makes sense for us to do so, and that will be for a number of years. I've no doubt about that. It's got a very solid revenue stream associated with it, lots and lots of customers on that platform. But yeah, we are now prepared to say to a customer, if they decide that actually they don't think FileFinder is for them anymore, we can say to them, okay, well, rather than going to a competitor, why don't you come to Talentes? And again, we've got examples of customers that have told us they were leaving and have now stayed because they want to go to the Talentes route. So bit of a verbose answer, but hopefully that gives you what you need. Thank you for your question.
Great, super, thank you. A couple for you, Ian. How is your business split between the search and contingency markets? Can you give us an approximate?
Yeah, through H1, the revenue split was roughly 40% from the exec search and 60% from the contingency. I think that shows the underlying strength from the contingency products. We saw that the exec search products were going to go into decline, which is why we decided to position our new product, Talentes, in that exec search space to supplement that sector's revenue going forwards.
Great. Okay. Another one for you, Ian, if I could. How exposed is Dylastone to the current FX movements?
I mean, luckily, our exposure is minimal. Most of our cost base is contained within the UK, and our overseas operations only make a small contribution at the group level. However, since our new product, Talentes, is really global in nature, the strengthening of sterling should only have a positive impact on our future, on the revenue streams going forward.
I think if I could add to that, Ian, thank you. Looking at Talentes in the last quarter, most of our Talentes clients are UK based, as you would imagine. But in the last quarter, we've sold far more Talentes systems outside the UK than we have inside the UK. So I think that's a really good point. Actually, the pound doing what the pound is doing is likely to be beneficial to Talentes revenues.
Great. Okay. One question slightly broader. I mean, what might the impact of a potential recession be?
Well, again, one of the things that, thank you for the question. One of the things that I think is probably worth making clear is that we are a recruitment software company, but our business model is not the same as that as a recruitment company. Most recruitment companies have to eat what they kill, as they say. They have to go out and place someone. We have recurring revenues. We have subscriptions. We have SaaS contracts that keep going. So, firstly, if there is a recession, generally speaking, we tend not to lose our clients overnight anyway. Beyond that, our view is that Infinity is particularly strong in the temping space now, as we've alluded to. Most of our growth is coming in the temping space, and that is a sector that, generally speaking, tends to be somewhat cyclical. And on the Talentis front, you can actually make an argument that buying Talentis will save you money, because instead of buying a CRM and a LinkedIn premium license of some sort, you can buy Talentis and actually get that for less. So, there is that side as well. So, I think going into any potential recession this time, we feel we're in a much better place than we have been in any previous economic turbulence we've ridden through. We've ridden through a few.
Great. Okay. Very encouraging. Good. Okay. Well, that takes us to the end of the questions that we received. Jason, I don't know whether you'd like to give us the little postage stamp summary of where we find ourselves as a closing statement for investors.
Thanks, Tom. No, I mean, I think we've explained our story. We've obviously had a tricky few years. There's no doubting that. Some of that down to our own mistakes, down to my mistakes, but some of them down to things like COVID as well. But I think the reality is we've taken steps, and we're now in a position where we're really optimistic about the future. Both sides of our business have got real reasons to be positive, and we're very excited about the future.
Good, excellent. Okay, well, thank you, Jason. Thank you, Ian, very much indeed. Could I ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If anyone has further questions or would like additional information on Dylastone, please do get in contact via dillistone@walbrookpr.com. Many thanks for attending today's presentation. We look forward to updating you again soon.
Thank you all for joining us. We really appreciate it. Bye-bye.